Hello and a very good afternoon to those in Europe and good morning to those in the US. So firstly, taking a recap of what we've just seen, and we've seen the Bank of England keep their rate on hold at 0.5% and their asset purchase targets, that on hold as well at 325 billion sterling. So this was in line with expectations. However, very shortly before this, we did see China cut their benchmark interest rates, so cutting the lending and deposit rates by 25 basis points each. So with this, we saw a move higher in terms of the European and US stock futures, so buoyed by this cutting of interest rates by China. And we also saw cable, and that saw some strength moving towards session highs. A couple of analysts were expecting the asset purchase target to be boosted by around 50 billion. So with that, with that inline expectation at 325 billion, we did see some strengthening in terms of sterling across the board. Now, in terms of the rest of the session, the key focus will be on Fed's Bernanke's testimony on the economy. That's scheduled for 3 p.m. London time, 9 in the morning in Chicago. Now, this is the last opportunity for Bernanke to signal any sort of easing or monetary accommodation before the next FOMC rate decision. That's on the 19th and 20th of this month. So market participants were looking out for any sort of comment on the current labour market, and if he sees any worsening of this, and if he sees any sort of QE being pumped into the economy. So even a simple comment such as Bernanke thinking about this could cause a market reaction. Markets tend to love liquidity, so we'll be buoyed by any sort of suggestion of this, and we likely will see some weakening in the dollar as well. Now, as there's been a lot of hype and anticipation around this, no mention of QE at all could see some slight disappointment in terms of the markets. However, that'll be interesting going forward. But just taking a look at some of the recent comments we've seen out of Fed officials and also the FOMC last decision. So in April, they upgraded their 2012 growth forecast and lowered the employment rate as well. So it'll be interesting to see if there's any change in that from Bernanke. But in terms of recent Fed comments we've seen, we recently saw comments out of Fed's Evans, who suggested strong accommodation at this time. However, we've conversely seen comments out of Fed's Fisher, who said now is not the time for more accommodation. However, these both in fitting with the current stances of those Fed members, so not too out of line. So that'll be interesting going ahead. Any sort of suggesting of QE from Bernanke or any sort of hints towards this could cause some serious market reactions. Again, that's scheduled for 3 o'clock London time, 9 in the morning in Chicago. But in the meantime, and that's enough from me, we'll have a wrap up for you at the end of the Wall Street close. But in the meantime, have yourself a very nice trading day.